Hello, a very good day to you. Welcome to another episode of Equity Forex Academy. So today I'll be showing you how you could enter an instant market execution, pending orders such as on the buy stop, sell stop, buy limit, and sell limit. And this video is preferably precisely for trade signals. Okay, so how you could just take trade signals at ease. Well, if this is your first time of visiting this channel, please do well to subscribe in respect to future updates. Okay, thank you very much. So let's get on with it. Let's take a look at the signal. Okay, this is a EUR/JPY. Let's take a look at this EUR/JPY. It's telling us to sell at current market price. Okay, so anything that is not buy stop, sell stop, buy limit, sell limit, it is not stipulated that way. Just know it's an instant market execution. Okay, and we can only see stop loss figure there, and the take profit is open. There's no entry price, so is an instant market execution. So what we have to do is go to our MT4 chart, look for EUR/JPY and enter a sell. Just sell by market. Some brokers is sell by execution, sell by whatsoever, depending on the broker. But you just have to click sell, and that's it. Then go back to the trade alert, trade signal alert. Then copy the parameters you see there. Okay. Here we're only saying that the stop loss. Okay, the protective stop loss to protect the account, to protect the trade and the account rather. But the take profit is open because each trader is supposed to have his or her trading plan, the pips that is supposed to get in respect to the trading plan per trade. Okay, so that's left for the trader to decide, but the stop loss is stipulated. So what you have to do is just right click on this you trade, then click on this pencil like sign there, then modify. Okay, you can see this red, this column that is red here, that is colored red, is your stop loss, right? The one that is colored green is your take profit. Okay, so just click long press on it, then paste. That's it. So if you've known your take profit, you do the same, or you could just click the plus sign, then edit to how you want it to be. So that is that. Excuse me. Then we click modify. Click modify. Come to the trading. There is it. Okay. So that is that. I'm just gonna delete it because that was a trade signal for this morning. So in respect to that, we're going to be looking at let's take a look at a buy stop. Okay, we're done with the instant market execution, and that's just it. It's a simple way to do it. It's easy, and that's just it. Okay, so let's take a look at a buy stop. A buy, let's set for instance, there's a signal on your JPY telling us to initiate a buy stop. That's a pending order. Okay, all we have to do is click on this plus sign. In every pending order there is an entry price. Okay, click on the market execution, click on buy stop, and you see the price. This is the point where you have to impute the entry price. Okay, so let's assume the entry price is 136.200, and our stop loss is going to be okay, below the entry price. Let's say stop loss is 135,500. Okay, and we're just going to place it. Okay, so you see, this is it. As is, if for instance the market keep moving up, of course we know what buy stop means. Okay, entering the market above the current market price, expecting the market to keep going up, triggers our trade and continues going up for us to be in profit. Okay, but if peradventure the market triggers our trade and starts reversing, that means we're in loss, and whenever it comes to this point, it's just going to stop us out of the market with that minimal loss we've already incurred. Okay, so that is that for the buy stop. So let me delete it because it's not part of my trade currently. So let's take out a sell stop let's take out on a new instrument. Okay, let's use the USD card. Okay, USD card. That's a nice downtrend. Let's set a search stop on this pair. You click on the plus sign, click on market execution. You check out your search stop. Remember, a search stop simply means entry the market below the current market price, expecting the market to move down further, trigger your trade, and continues moving further for you to be in profit. Okay, so let's say our entry price will be here 1.28000. Our stop loss is going to be 800. Okay, sorry, 1.28800. Place, that's it. Okay, you can see this is our entry point. Once the market move further, triggers it and keep going down, we're going to be running in profit. Okay, but if it reverses for any reason after it has been triggered, we'll be running in loss. Okay, so as you can see, this is the buy stop. Okay, so that's a simple way of doing it. Let me delete it and okay, let's do a buy limit. Okay, a buy limit, let's say use this pair. A buy limit, what we have to do is just, I guess we already know what a buy limit simply means, right? For those that ain't aware of what buy limit simply means, is entering the market at a point whereby you expect the market to get to that level, preferably at a support, and upon the market triggering that level, the market has to reverse. Okay, the market has to reverse and start buying. That's a buy limit. Putting your entry point below the current market price, expecting market to move further, triggers it and reverse upwards. Okay, so that was buy limit simply means. So this is it. This is our entry price and this is our stop loss. Okay, so here we go, and this is it. Okay, we've assumed the market will come down to this level, triggers it, and reverse up, and for us to run a profit. If for any reason the market triggers it and keep coming down, we'll be running in huge loss and then gets to our stop loss point and take us out of the market with our already incurred loss. Okay, as you can see, buy limit is here, so delete it. Now what's left for us to take on is a sell limit. Okay, a sell limit is just the opposite of a buy limit. Put entry the market price above. Okay, setting your points above the current market price, expecting the market to get to that region, preferably a resistance, a strong resistance. The market triggers it and it reverses down. Okay, so let's take a good level at which we could assume. Okay, this level, when market go to this point, it came down. Okay, you can see a lot of wicks here, rejection, and before it started coming down. So let's take this point, which is on 1.30500. Okay, sell limit 1.30500. Okay, that's our entry price. While our stop loss is gonna be 1.3. Let's give the market a lot of room to breathe. Okay, 1.31000. Okay, so place, you can see there is our entry, there is our price, there is our trade. Okay, this is the entry point and here is our stop loss. So whenever the market reverses upwards, let's assume our buy limit was triggered and the market was very favorable in our direction and we took a lot of profit. once we go to this point, once the market gets to this point, it's going to trigger this trade again. Okay, maybe we must have taken our profit before now. Then once this trade is triggered, if the market maybe he start doing a lot of a bit consolidation and whatsoever before the retracement, sorry, before the reversal commences, we're going to be in profit. But if peradventure the trade did not reverse, meaning the sell limit didn't hold, okay, we'll be running in loss until it hits our stop loss, or until the trade start moving in our direction. Okay, so sell limit is just simply, it's like you're setting a limit, okay, expecting the market to move to that point, triggers it and comes back. It's just like a roof. When you throw a tennis ball, once it hits the roof or a ceiling, it's forced to bounce back. But if for any reason it didn't bounce back, that means there is no limit at that level. So a limit is simply saying, okay, there's a lot of bearish potential here. So whenever the market gets here, there's every higher probability that is going to reverse. Okay, so I hope this will help you take your trade signals a lot effectively, and also help you manage your trade in terms of stop loss and take profit. And if you've benefited something from this video, please do well to hit the like button and leave any comments, maybe question or any topic you want me to cover. Okay, so thank you very much for listening. Hope to speak with you again.